Now, in terms of last week, the realized growth, 6.02%, insane. Absolutely phenomenal trading week last week. Really, really happy with it. Predominantly brought to us via indices, but there is a notable call out from the NZD/USD, which we managed to pull in a 1 to 2.7 or 8, which was a really nice long position that we had there. Good afternoon, ladies and gentlemen, and welcome to this afternoon's Markets Now session. Hope you're all doing well. Good afternoon to you inside the trading community, of course, and good afternoon to everybody on the outside, on the side of YouTube. Hope you're all doing well out there, guys. Looking forward to probably a little bit of a quieter week. I was thinking about saying an action-packed week, but actually we're probably looking at a slightly quieter week this week. We certainly are on the data points. Economic side of things running very, very slow this week. Only two notable call-outs, and to be honest with you, the second one is going to be pretty limited in terms of market volatility. The first one, we may get a few bits of increased trading volume, but predominantly this week is going to be all about taking a bit of a step back as in comparatively speaking, to last week, where of course we had the big Fed event that caused a real stir and sent shockwaves across the markets. So, as we always do on the Mondays, we are going to dig through the market report, see what's up and coming throughout the week ahead, look at the key headlines, and then work our way over to the US indices to start breaking them down for the afternoon's trading session. Good afternoon to you, Corton. Good to see you, mate. And good afternoon to you, Scotty D, as well. Good to see you, mate. So, yes, that's the plan of action. So, starting from the top then. As always, I'm not going to read it word for word. That's been written for you guys, of course, so you guys can download your own copy in the usual place and go and get stuck into it as and when you can. For those of you on the YouTube side of things, it is available for download for free. All you need to do is become a UTC Basic member, so please feel free to come and join in the fun. Now, in terms of last week, the realized growth, 6.02%, insane. Absolutely phenomenal trading week last week. Really, really happy with it. Predominantly brought to us via indices, but there is a notable call out from the NZD/USD, which we managed to pull in a 1 to 2.7 or 8, which was a really nice long position that we had there. The exposure as it stands, 30% Forex, 55% indices, and 15% in commodities. Now, I'm going down to the weekly return. It was a day-by-day game, back-to-back gains every single day of the week. Thursday, very reduced, and then Friday, I was actually incapacitated from trading, and I was in the city predominantly the entire day. Although, what I would say is the first time I've managed to catch up with you guys properly since then. The trading opportunities that were sent out from my from sitting outside the BOE having a coffee, they were actually really quite good. And looking back over the positions yesterday, that were sent out on the Friday, obviously I didn't trade them and didn't take any myself, but they were actually really good and probably would have brought in, from my own calculations, about another 1.3%. So it could have been a 7+% week last week had I actually had the ability to trade on the Friday. So very, very good. Very, very good indeed. Monday, we had 1.6%. Monday was 1.4%, Tuesday 1.6%, Wednesday 2.05%, Thursday was about a 0.67 day on the Thursday. So very, very good overall. We are now at the 120% annual return rate, which is a pretty major milestone. We're currently, as of today, on the 22nd of September, so we are coming to the sort of the end of September, as it were, heading into the official winter season, or Halloween, I suppose, next up, and then of course November, December, and then into the beginning of 2026. And as it stands currently, I don't think personally we will be on track to do 200% this year. It would be amazing if we could, but I don't think we will. I think at this current trajectory, we're probably looking at about 150% net return, which would be fantastic. I'd be absolutely chuffed with that. So that's great. The monthly and weekly average also took a bit of a tick up as well as a result of last week's, but not by much. It takes a lot to move these numbers now, in terms of the averages, because we're so far down the line in the year. Good afternoon to you, Matthew. So that's where we are with the portfolio metrics. In terms of longs versus shorts this month, we are actually on the same exactly. So we did actually have more longs than shorts last week, but because of where we were at the beginning of the week, it's now balanced it out. So we're absolute 50-50 on trading volume longs versus shorts. And then comparatively versus the S&P and UK FTSE, we smashed it. 6.02%. S&P gained 1.97. The UK FTSE actually took a dip down at minus 1.35%, closed the week out. Now, moving into the market trends and opportunities. This week, we are looking at the Standard & Poor's, the NZD CAD, natural gas, and gold. In number one here, S&P 500. I'm potentially looking at a price action corrective before the continuation takes place. I much preferred this over and above the NAS 100 and the US 30 Dow Jones this week. It looks like the cleanest setup on the daily time frame. So stay tuned for the breaker structure below this point for that move back down into the red circle, and then we can potentially look at the long thereafter. It is worth mentioning that these margins are incredibly wide on a 15-minute time frame. So you probably would expect this to take a couple of days, if not even potentially longer. So we may see the continuation play out in the following weeks to come. With NZD CAD, really nice position at the moment. This one's actually been, or it's trading back within this margin that we kind of built up for the leg up a couple of weeks ago. And then obviously we hit the big point of liquidity, had the nice big sell-off last week. Now we're back here again. We're waiting for either of the breaker structure above to go long or the break close retest to go short. Remember that this is not the main point of, this is not just a simple breaker structure area. This is an actual structural point. This area down here is the bottom of the base of this huge V reversal. That was from a few months back when we had the big chain liquidation event that took place. So there is a possibility that we could see that again. So that's what I've outlined here. Again, these biases are to give us a directional bias over the course of this week, but also in the coming weeks. I'm not for a moment anticipating the NZD CAD to fall next to 400 or 500 pips this week. It doesn't make any sense. But if we get the break close retest, we could possibly see a nice move and maybe capture some of those on an intraday scale. Moving down here into natural gas, I've actually left the previous week's market report analysis up here as well. We have been getting some really fantastic calls on this one. Very, very good track record in natural gas as of late. The problem is actually trading it. The thing takes off at such awkward times, and also when it moves, it really, really moves, which makes getting the line on it quite difficult. This week, we are looking at the potential for a buyback opportunity from liquidity, so maybe looking at retesting the previous highs. I really want to try and be on the ball this time around, because I think it's the last two opportunities now that have been sent out I haven't actually personally benefited from. So it's going to be it will certainly grate on me. Let's say that it will grate on me if I don't manage to get any profitable trading opportunities out on this one this time around. And then finally wrapping it up, we've got gold. And gold at the moment has been on one hell of a bull run. It seriously has, just like silver. Silver's probably outperforming gold to a certain extent at the moment. Now, this week is going to be the decider. We've got the breaker structure incoming. That's going to be, if not already done, we can have a look at that in a moment anyway. But if it's not done already, it is very much due soon. Once we get the retest, the red dot is on the retested point of liquidity because that's going to be the decider. Are we going to get the continuation of the bull run, or is it going to come back down to liquidity again and maybe take a little bit of a pause after having such an incredible move to the upside? I've outlined my thoughts, technical thoughts, and fundamental thoughts for each of the assets. So please, when you want, go and have a read. Now, in terms of the market challenges this week, ladies and gents, it's a real slow one. We've got Fed Chair Powell's speech, and we've got the core PCE price index. One is on a Wednesday, and I think the other's on a Thursday, or maybe it's a Thursday and a Friday. I'll double check that with the calendar in a moment. But ultimately, it's looking incredibly quiet. So in terms of our trading opportunities that we've got, the Fed Chair Powell speech is reaching a 4 out of 10, and the core PCE price index is reaching a 2 out of 10. So hardly anything at all. Like, as I've said before, in this algorithm, if these make it to the scale, it means they will move the market. But a 2 out of 10 is going to be maybe a 15-minute spike. A 4 out of 10 is going to be possibly some whipsawing or a initial how do I say this? An initial moderate volatility strike, but then a sharp corrective thereafter, and the market will probably end up trading 20 minutes after the event takes place exactly where it was before the event takes place. So that's pretty much what we're looking at there. Now, in terms of commercial longs versus short volume, straight from the CTFC, S&P 500 is 38% long at the moment, which is actually really crazy if you think about it. It's a lot of short commercial liquidity out there, which makes my trading opportunity to the downside first actually make really good sense. The NZD CAD's 41% long at the moment. So if we go back up to the NZD CAD here, we can see that 48% long commercial liquidity probably means that we could see the sell-off take place over the coming weeks rather than the long. We've got the VIX, which is 34.47%, so we're at really low levels of volatility at the moment. We've got natural gas, which is coming in at a whopping 65% commercial long. I think that's pretty safe to say. I mean, it looks like it's been building here for a move to the upside. We're coming into the winter season. Everything's lining up for a real big bull run on natural gas. So there, we just got to be patient, bide our time. And then, of course, we've got gold, and that's actually crazy. 29% of commercial liquidity is long, 70% of it is short. So, what's going to happen here is, obviously these are no guarantees to price action. We have no idea the proportion of value there that are limit and pending orders, and they're sat in the market waiting to trigger, because it measures that as well, right? So it's going to be interesting to see if we do get a little bit of a move and then a really big sell-off, or if we just instantly come back down to whatever that is there. Whatever that is there, down at the lows. Let me just zoom in for a moment. 36.28, 36.30-ish, I would say that from. So that's where we are there. So if we carry on scrolling then into the economic and order book impact report, we've got, of course, the two major ones. We've got a 3 out of 10 on the core PC, so it's actually risen a tick. And we've got a rise in a tick on the Fed Chair Powell speech. This is broad market impact. It makes complete sense, to be honest, to see these rise just one tick when it's measuring against the broader market. Going down, 40% is going to be via FX. So the FX market's going to be 40% affected. So that, again, is not surprising, but we do have a 5% uptick in exposure to equities and indices as well. Commodities usually sitting down at the bottom. So there's nothing notable call out on this as well. In fact, the data came out at 0.1 to 0.4 difference over the previous week, so I didn't even bother updating that, FYI disclaimer. But yeah, it's pretty much right on point. Now, looking at equities in focus, we've got GLBE, ELF, VCEL, and INMD this week, which are our callouts. The spotlight equity of the week is Samsara, which is IoT. Very interesting company. There's a very constructive base breakout to give an attractive risk reward. This is trend continuation. We only want to really be focusing on buying equities. I don't want you guys, trying to short them yet. So that's a decent opportunity there. for you out there who want to get stuck into the equity markets. And then finally, we have institutional buying interest by sector. AI tech, specifically AI tech, and in even more finer detail, it's semiconductors, had 3.5 billion capital inflow in 72 hours. That is insane. So, shed load of money going into AI tech over the course of the last 72 hours, or maybe 4 or 5 days, let's say. Energy markets had a 2.2 bill inflow. Metals, interestingly enough, came up on the radar, 1.6 billion, which took number 3 in the top 4. And then consumer products, and specifically, this is around cosmetics, makeup companies, and stuff like that. A lot of that is underneath this particular consumer brand. Truth be told, I didn't actually have enough space to write what I needed to write under the titles. it made the bars go really skew. But I have it in my head. So just remember that. And if you get confused, call back to the stream. So that's where the consumer part comes from, which is interesting, really. I mean, 1.3 billion going into cosmetics and stuff like that, and makeup and stuff. I wonder why. I wonder where that's coming from. But anyway, that is what it is. So that right there is the market report for this week. There's lots of stuff, obviously, that I did not cover. I didn't exactly read all the description, so please download your own copy and get to it whenever you like. The disclaimer is up here next. The information provided in this market analysis report is for informational and educational purposes only and should not be considered as financial advice or recommended to trade or invest. Yada, yada, yada. So please go and have a read of that whenever the hell you want. So that's it for the market report. Let's get stuck into our US indices this afternoon and see if we can find ourselves a couple of nuggets that we can trade, which would be nice, wouldn't it? Get Monday off to a good start. There we go. Right, let's close that down. All right, onto the charts then. Let's have a look. Where are we? First, actually, I do want to cover gold just quickly, have a look at where that's at. So we have gone for the big breakout, certainly given us the big breaker structure. But remember, guys, on a daily time frame, we do need to close above this area. Okay, so we're looking to close above the ceiling there. The ceiling's at approximately 37.12. We need to get the daily close up around here, and then needs to open above the zone, come back down, retest, and then that is at the decision point. Now, let's dig into the US indices. So we've got Dow, NAS, and S&P. Not planning on trading all of them today. Want to get off to things a little bit of a slow start, I suppose. 15-minute time frame. Let's check out what we're dealing with here. So US 30 Dow Jones at the moment looking incredibly choppy. Very, very choppy chart, isn't it? A lot of ups and downs. Yeah, it lacks some real intention in some of these moves, doesn't it? But we are trading on the floor currently, and that I do like. I do like that setup. So we've got this area in here, which is, I'd say, quite a nice breaker structure point, really. Let's just go back in time. Yeah, I think if we increase the width on that just a little bit, we could probably. Yeah, that's really nice. Yeah, that's really nice. Okay. Well, there we go. We don't have to spend too long on the Dow this afternoon. So we're looking at the breaker structure here. We're looking at the target profit up at 46.34-ish. And I would probably have my cannot but think have a 1 to 3. I mean, it's still going to leave a fantastic margin down there, isn't it? No, because there's a lot of lows, isn't there? Like these two here, these two, this one, this one. And we can beat a lot of those lows by having our stop loss at 46.138. So I'm going to go for the 1 to 2.65. Now, this is an intraday trade, though, isn't it, T? You know, that is definitely an intraday trade. There's no doubt about it. If I looked at that on a 1 minute time frame, it'd be scary. Yeah. But market opens, we can clear that margin out in the space of 5 minutes. On a Monday, not so confident, but it can be done. Will it be done? That is the question. We've actually come into liquidity here as well. That's very good. Yeah, it's very good. I think I'm just going to run with it, even if it does end up staying open for 4 to 5 hours and it goes on until this evening. It is what it is. But it's a nice trading opportunity. It's very well balanced. We've had a lot of up and down chop, but for the most part, when we've had the moves at the 230 point, they've been very successful. Very successful, actually. We've had some really quite significant moves around here. So I'm going to run with it. We'll see how it goes. So the market's already achieved liquidity. So all we're doing here really is looking for that market order opportunity at 46.20 and yeah, dropping it in. So that's going to be the Dow there. Next up, NAS 100. Look at the US tech. I think this is going to be probably a little bit nicer in terms of the style of trade we're going for here. Much more of a actual breakout trade and getting in and out of the market hastily. So we have the long opportunity. Yeah, we've got the long opportunity about there. So much more of a decreased time spent at market with this trading opportunity. We're looking at the breaker structure above there, targeting here with our stop losses about, I would say, yeah, 24,578. So maybe a 1 to 2.2. Excuse me, a little bit more of a modest trade, but I do like it all the same because it is in and out of the market. We won't be here. We won't have to be, hanging around too much in there. I think it's worth calling this out as well, this low. If we had a rejection from this area up here, and let's say we broke through this area, let's call that the breaker structure point, then there is the possibility of a short between these areas as well. So targeting there, stops about here, 50% point between those two zones in the middle. You've got yourself a nice little 1 to 2.4 there as well. So that one could be all right. I don't particularly want to short below here, and that's just because we've had a couple of attempts at this already. So it doesn't really fill me with confidence. But I think if we can break inside this margin here and then come back down for that short, that will be really nice. And we've got the long on the other side as well to cover us. So that's a nice little setup there on the NAS as well. I will check the US 500s. Okay, well, there's instantaneously no shorts available, right? We're on top of big liquidity here, so that's not something I want to do. For the long, so we've got that level there to contend with. We're trading in the middle of these two at the moment. So I'd have to wait for the market to breach 666 and then push up from there. And that's a small margin on top of there. And why wouldn't we trade the NAS 100 instead? No, it doesn't make sense. Let's keep things simple today. Now, S&P 500 doesn't make sense in comparison to where it's trading at the moment. The US 30 Dow is looking really good, but only really on one side of the market. And then we've got the NAS 100, and that's looking pretty decent. Where we're trading at the moment, we are limiting ourselves on the shorts. So if the market does want to break out short today, and NAS 100 doesn't pull through for us, we're probably not going to be in the market. Okay, so let's just hope that we can potentially see a little bit of a push first, or over the course of the next maybe 35 minutes before the bell rings to promote a little bit more of a diverse range of trading opportunities, because we don't have, as I say, a great deal of shorting opportunity in the US Open this afternoon. So Monday afternoons are usually quite a long session, but flowing through, I think there's not much to talk about from the data points of view this week, is there? That's probably why things have hurried up a little bit more. Is there any questions? It is what it is, I suppose. Any particular bits and pieces you guys want to cover? No? That's good. No worries. All okay, all clear. Good. Good stuff. All right, team. Well, listen, that is what it is then. Short and sweet. Let's see what we can do this afternoon. Clear down a couple of those orders on the US stocks would be nice indeed. As I say, if you haven't done so already, please go and get your market report. Any questions you want to know about it or anything that you need assistance with, please feel free to drop it in the chat. And yeah, let's go get it, guys. Let's go get it. So take care of yourselves out there. For those of you on YouTube as well, I hope you have a fantastic trading week if I don't see you again. And yeah, look forward to catching up with everybody on the inside of the trading community in the next one. And please fire out a few trades. If you're trading the US Open, you're active this afternoon, fire it out. I'd love to see what's going on. So take care, guys. Have a good one, and I'll see you then. See ya. Bye-bye.